1, 2, 3, 4, 5, 5, 4, 3, 2, 1. Hey, it's Tim Bratz. Today we're going to talk about the 5 benefits to commercial real estate investing. Let's rock. All right, there's a lot of benefits to investing in commercial real estate. Here's my top 5. The first one is scalability. This is a big one. So scalability, essentially when I went from going and investing in single family houses to then scaling into apartment buildings, there was a big difference. I could go to one 10-unit apartment building versus 10 single family houses. Drive to one location instead of 10 locations. Look at one roof instead of 10 roofs. Look at one foundation instead of 10 foundations. Do due diligence on one location instead of 10 locations. Negotiate with one seller instead of 10 sellers. Get financing on one property instead of 10 properties. Manage one property and collect rent from one property instead of 10 properties. And then sell one property instead of 10 properties. So many different benefits to the amount of scale that you can have getting into bigger properties, larger properties, bigger apartment buildings than doing the single family side of things. The second benefit to investing in commercial real estate is that bigger deals equals more equity. Here's what I mean by that. It was very difficult to attract A players into my business when I was doing single family houses. Why? Because when you're carving up, 10, 20 grand from a single family flip profit, a lot of times that's not exciting enough to carve up amongst several A players. The difference when you get into commercial real estate, you're not playing with 10 or 20 grand, you're playing with $1 million to $2 million. And that excites A players. You can then attract A players by becoming equity joint venture partners with them, give them some equity in the deal. It allows me to focus on the things that I'm really good at and then staff out or partner up with on the items that I'm not that good at doing or the things that I don't like doing. The beauty of getting into bigger deals is that there's a lot more equity in them. I would rather have a quarter of a watermelon than 100% of a grape. So you know what I mean by that? There's a lot more juice in the squeeze of a quarter of a watermelon than there is in 100% of a grape. If you own 100% of a grape, you're 100% responsible for overseeing that project. You're 100% liable for overseeing that project. 100% of the headaches and the decision making falls on you. If you own 25% of a watermelon, you can do a lot more by focusing on what you're good at and being able to joint venture and partner up on things that complement your skill set. I would rather have 25% of a watermelon and be able to do the things that I like to do and the things that I'm really good at, because then I can excel at it and then I can grow a watermelon instead of having 100% of a grape that stretches me in all different directions. So it does 2 things. It allows me a better quality of life for just as much upside and gets other people partnered up with me where now we have a good relationship. We start doing more deals together and 1 + 1 = 3. The other thing is, you play with dollars, you'll earn dollars. If you play with thousands, you'll earn thousands. If you play with millions, you will earn millions. And likewise, you play with billions, you will earn billions. That's next level, right? The third benefit to investing in commercial real estate is probably the number 1 reason why all of us got involved in real estate in the first place, which is residual and passive income. Talking about mailbox money, doing something once and getting paid on it over and over and over again. There's a difference between residual and passive though. Residual is doing something once and getting paid on it over and over again, but there's still some active elements to it. Passive, which, it might be a little bit of a fairy tale. There's some passive stuff out there, but you still need to pay attention to it, right? You can passively invest in something, and as long as you're partnered with a great operator, that mailbox money can hit on a residual basis without you having to do much on an ongoing, babysitting type standpoint. But isn't this the reason why we all got involved in real estate? And then all of a sudden we all get stuck in this transactional trap of trading our time for money, transacting a deal, getting paid on it. That's exciting, but then we have to go do it again in order to get paid again. Do it again to get paid again. Do it again to get paid again. Versus buying a residual income producing asset and then layering it with passive property management. That's what we do. The fourth benefit to investing in commercial real estate, and really this one spans all real estate, is the tax advantages. It's just amplified with commercial real estate. It's crazy. Why would that be the case? Well, here's why it's the case, is because since the beginning of civilization, wealth has been measured in land ownership. And if the landowners have the wealth, then that means they also have the power, which means they also have the influence to influence tax law. And because the tax law is influenced by landowners, there's a lot of benefits to owning real estate. One of those benefits is depreciation. You can actually own an asset that appreciates in value over time, but on paper, through the IRS and tax advantages, it depreciates in value. So you're able to offset a lot of your income because you can claim depreciation. There's also tax-free refinance proceeds. Here's what I mean by that. If you own a property, and let's say you're all into it for $100,000, but it appraises at $200,000, and the bank's willing to give you a $140,000 mortgage. That's a 70% loan-to-value loan. You can go get a $140,000 mortgage, pay off whatever the short-term financing was, and put $40,000 of tax-free refinance proceeds in your pocket. How is that tax-free? Think about it this way. What if you owned a house free and clear, and the bank's willing to give you, $70,000 on your $100,000 house? That loan that comes to you is not taxable income to you. Why? Because it's a loan. Instead, you actually have to repay it back, and so that's why it's not taxable to you. The difference when you're doing that with investment property is that it's not you repaying that loan, it's your tenants repaying that loan. So you can have an asset that produces cash flow, that covers its operating expenses, covers its debt service, its mortgage payment. So they're paying for your asset, right? And then it puts cash flow in your pocket, and they're paying for the loan that you just took out. You can extract that equity and go and roll it forward into more investment property and build more wealth, and you don't have to pay back that loan, right? It's your tenants doing that for you. Another benefit is long-term capital gains. If you own any real estate for over a year and you sell it, your tax liability on that is reduced. It's reclassified into long-term capital gains instead of short-term capital gains. And for most people, that reduces it down to about a 15 to 20% tax bracket instead of whatever your earned income tax bracket is. And then there's 1031 exchanges. A 1031 exchange is called a like-kind exchange. It's when you buy a property, and let's say you're into it for $1 million, and then you sell it for $2 million. You would traditionally have to pay taxes on that $1 million gain. If you roll the money forward into another like-kind property, another investment property, you can actually kick the can down the road, and you can roll forward all those gains, all those proceeds, without having to pay taxes on it right now. It's not until you sell the second property, if you ever sell that second property, and at that time, then you would pay taxes on whatever the additional gain was. Or you could just keep on kicking that can down the road through more 1031 exchanges, and then, here's the real benefit and how generational wealth is created. When I pass away, my kids inherit all my property at a step up in basis, which is whatever the property value is when I die, and it eliminates all of that gain over the course of my lifetime. Now they're going to have estate taxes and everything if it's over $22 million, which I have every intention of it being, but there's a big benefit to it, and that's how a lot of these families create generational wealth. Which leads me to the fifth benefit of investing in commercial real estate, which is building legacy wealth. I'm a big believer in this one. All my companies have the word legacy in it. Legacy Wealth Holdings is my investment company. Legacy Wealth Education is my coaching and consulting business. Little Legacy Library is my kids' personal development books. I'm a big believer in creating legacy. The way that you create legacy and generational wealth is very simple. You buy assets that produce income, and you hold on to those assets over time. Don't wait to buy real estate and then wait. And you think about it this way. This isn't to pound my chest, I'm not trying to brag or anything like that, but I own a portfolio that's north of $400 million today. And it's all income producing assets, and I do have some debt and some private money on it. But even if it was fully leveraged, which it's not, if you look at what would happen, and I built this entire portfolio over the past 5 years, if I stopped buying property today and you watch what happens over the next 30 years, I would pay down all those loan balances. It's not me paying it, it's my tenants. I bought assets that create enough value for other people that are willing to pay to live in those properties. They pay to cover the operating expenses in those properties. It pays down my mortgage every single month, and it puts cash flow in my pocket for the next 30 years. And I have tax benefits from it for the next 30 years. And it allows me to then own assets that get paid down over time, and those properties also appreciate over time. So when you think about it, I don't know what properties were worth 30 years ago, but I would assume that they've at least doubled in value on average across the entire country over the past 30 years. So if you take a look at my portfolio and it goes from 400 million to 800 million 30 years from now, and I've paid down all debt over the past 30 years, then that means I have $800 million of property owned free and clear. Now, it's not all mine, but a good chunk of it is. Probably around 30% of it, maybe a little bit more. So that means my personal net worth, if I stopped working today, is $250 million. It's wild, right? And I'm not saying that to like pound my chest or brag or anything. I'm showing it to you because I want you to see the power in buying real estate and buying assets today, letting them perform over time, letting them appreciate over time, letting other people pay for those assets and pay down your loan amount over time. And it allows you to create legacy wealth for you and your family. So let's do a quick recap. The 5 benefits to investing in commercial real estate. Number 1, scalability. Number 2, more equity in deals. Number 3, residual and passive income. Number 4, all the tax advantages that you get. And 5 is building legacy wealth for you and changing your family's financial tree forever. If this is helpful for you guys, please like the video. Please give me some comments. Would love to hear your thoughts on it. Share it with other people who need to hear this information. If it's helpful for you, it's going to be helpful for somebody else. So please share it. Please like, please comment. Please hit the little notifications bell. So as we drop new content, fresh content, and add more value, you're the first person to get it. Appreciate you. I love you. Be your best.